doing business in Africa. You can't afford to be without Africa Investor.
Thank you, Hubert, and thank you for having me today. And I must apologize for my short participation today because I actually just moved to my new offices at 6 in the morning today, and I'm still in the process of moving. I'm a real French bureaucrat, so I like folders and dossiers and chasseurs, and so I'm in the process of moving my folders and my dossiers from my old office to my new one. And so to make long story short, enough morning. So I just want to throw in a few comments here today. Quickly, just saying that everything I've read, so far coming from Gresby and Africa Investor looked very interesting and very useful. So it's a great framework, and I think also the Cambridge Institute was a major contributor to the contours of that framework, and it's really great work. So the only marginal note of caution that I would throw in, and it's really on the margins, is I think a lot of things are happening at the same time. So a lot of rating agencies, consultants, think tanks, companies I'm not saying that they're doing the same at the same time, but to a certain extent they are, and maybe less eloquently or less beautifully than what we are doing, but they are doing it, and to a certain extent across all asset classes. The term SDGs is progressively replacing ESG. So this is really semantics. So it may not be an accurate description of what is behind the acronym, but semantics-wise, SDGs and to a lesser extent impact are being used and abused as new words to supersede or replace CSR and ESG, and they're often used interchangeably. This is how the real world operates. So it may not be a pure and smart thing to do, but many people do it anyway. So we have to take that into account, that's happening. And more people are simply copying and pasting the Excel spreadsheet that they had for CSR and ESG, adding 17 lines or 17 columns, and renaming it as SDG or impact or whatever. It's happening, so we have to be careful. And it's happening at the same time. So many rating agencies, including very established, and Hubert know that I'm always moaning about that, but it's a very established oligopoly. And so when you have an established oligopoly, of course, even if what they do is not ideal or perfect, it has an impact, no pun intended. So I think we have also to take that into account, and so I think the framework on which you guys are working, and we are delighted to be part of it modestly at our level, is great. So the only thing that I would really try to stay away from is to have that sort of, Tony Blair, McKinsey, deliverology. So it shouldn't look like something that is, deliverologic, using, cold outcomes and just ticking boxes. Because if it's only about ticking boxes, Tony Blair style, it won't work, I think, because it would just be another framework, one amongst 10 or 20 or 50 frameworks, and we don't want that. So it should really be different and better, and I think it is on the way of being much better than that. So I'm only offering you here my constructive criticism, and I think you guys are really on the right track, but I think it shouldn't be too rigid. So I think I like the term framework, because framework is something that surrounds and pushes and steers people, but it doesn't imprison them within walls. So I think a broad framework is great, but really using narrow outcomes isn't great. And so basically what I would recommend is to keep on making it a framework which is fairly flexible and allows users to pick and choose, for example, really the 3 or 4 SDGs only that are relevant to them. And so we shouldn't force them to tick 17 boxes all the time, because it's a waste of time, frankly, and it may not be relevant. So really give them the feeling. So give users, be they asset owners or asset managers, give them the impression and the feeling that they can use it pragmatically. They can zoom in, take from the framework the 2 or 3 or 4 max SDGs upon which they think, because they're smart, they're grown-ups. So we shouldn't, do something too didactic, right? We should assume that they're grown-ups and they know what they do. They're professionals with PhDs or MBAs. So let them zoom in and take from the framework the 4 or 5 key metrics or the 4 or 5 key SDGs that are relevant to them in their opinion and play with the framework, as opposed to imposing a one-size-fits-all framework upon them and forcing them to tick boxes. So that would be my main, my main remark.
Thank you very much, Nick. That's very helpful, and we'll certainly take note and account of that. But I want to stay with you just on one point, as you have rightfully understood, and we've had many discussions on this. A lot of the things in the market are highly sophisticated and complex. Some, and in some cases, just fly above the head of the average trustee, for example. So you noted that we've actually put together a user guide, and we're trying to ensure that we can interpret and assist the likes of the trustee, the average trustee that doesn't have the financial expertise or is a career investment professional, be able to interpret and apply or use the tool. I just like your one or so recommendation about how we can make it more applicable to the trustees, in your opinion. Mindful of what you've just said is addressing simplification, but it seems to be simplification for those with MBAs and PhDs. What about the trustee degree of simplification? What would your recommendation be in that respect?
So you're right. Perhaps, what they call in Britain lay trustees, who are often, or even, in Montreal or Toronto, many of them are civil servants and teachers. So basically there are some professions which are overrepresented. And if you look at, pension assets, if you look at the size of pension assets, really municipal, state, federal, provincial, civil servants, government employees and school teachers and academics are very much overrepresented amongst, the boards of pension funds, large and small. Of course, we should simplify things for them, tailor things for them to a certain extent. But at the same time, even if you look at, modern large pension funds today, it's not like, if you look at the CIOs and the senior executives of these big pension funds today, it's not as monolithic as it was 5, 10, 15 years ago. So now you have more and more senior people and senior investment people amongst the largest pension funds in Australia or Britain or the Americas, who are not all guys with PhDs in economics or finance or MBAs. Many of them are actually lawyers, or they have a legal background. Some of them are actually civil engineers or architects, especially amongst those who invest in infrastructure, right? So I think there needs to be a modicum of vocabulary that can be shared by the architect and the civil engineer and the teacher and the lay trustee and the financier, right? So they should all be able, not only the trustees, but they should all be, it's like some Legos, they should all be able to use these Legos and then use them to build their own opinion or their own approach, but using the same Legos. So basically, and the SDGs, is the color, is the simple color coding and that square shape. I think the SDGs, visually offer us that, sort of simple, basic, foundational icon. And so they should be able, using that icon to remain on a general level. And for those who want to dig much deeper, activate an option or activate, clicking on one particular option, if they want to optionally dig deeper. But I would keep these two levels, the executive summary, the executive summary trustee level, and then for the technician or the expert, if and when he or she wants to dig deeper, we'll click on it, if you will, and go deeper. But we should not impose one-size-fits-all, broad, rigid model. I would keep it like an open platform, like a common denominator, common vocabulary, and a common methodology, but not too detailed and not too rigid.
Thank you, Nick. You're almost preempting some of the education that I've had to go through from a number of the actual Brain Trust members. They've got me on this new phraseology in the market around infratech, which is to say infratech is the new thing, but we should actually have the capacity to look at data as infrastructure and then be able to take it on a modularized basis and apply it to different segments and constituencies who have different requirements. And I think that's really one of the key things that we will be looking at in phase 2. But obviously the foundation has anticipated that. So really useful comments, and thank you very much for that.
One last comment is for the launch of the framework, I would avoid the first day of the IMF World Bank week, because I think that first day coincides with Thanksgiving in Toronto and Montreal, and we don't want to exclude the Canadians.
Thank you for that. Well noted. Well noted. Thanks, Nick.
Cheers.
Cheers. Appreciate your input. And I'm now going to move on to Francois. Please, if you can share your review, feedback, and recommendations. Over to you, Francois.
Thank you, Hubert, and sorry, bear with me if I may not have caught everything you said again. The sound is not very good on my side. I probably should have brought my headphones to the office. Next time I won't forget about it. So first of all, I wanted to congratulate the members that did participate, unlike me, actively in putting up this draft framework. I really believe it's not just a needed initiative, it's a very timely initiative. We're seeing currently now a number of similar endeavors sprouting here and there. Let me just mention on my member side the proprietary methodology developed by Meridiam, who published its first impact report referring explicitly to SDGs earlier this year. STOA maybe following suit, at least they're considering going the same way, developing the methodology. So we really stand at the cusp of potentially a multiplication of fragmented initiatives, and it's very good that you should be there as a proponent of a more sort of universal framework. So that's on the timeliness. The other side is, of course, the fact that many governments or public authorities are now considering recovery plans to reboost the economy after the COVID-linked recession. Most of those recovery plans or stimulus are heavily sort of focusing on infrastructure, as is often the case, with underlying sustainable development or energy transition dimensions underpinning the plan. That's certainly the case here in France, and ambitioning to harness the private sector. So on this side as well, a very timely initiative. Now, in terms of the current features of the framework, and again, I may not have quoted everything that was said, but I like the fact that it's still a relatively broad and sort of encompassing potentially a large number of dimensions in its current status. It sort of provides, as I see it, the tent or the roof under which we will be able effectively to fine-tune and complement over time with additional KPIs or instrument to measure. Speaking of which, I believe the KPIs that you've started listed, of course, they need to be measurable. They also need to be, as much as possible, actionable and comparable. I understand the comparability dimension is at least partly already addressed through the comparison with peers. The a small graphic that appears in your last slide on how our peers are broken down in terms of positive and negative contribution related to a particular target. I don't know if it's enough, frankly. It seems to me if it really is to be manageable, traceable, and comparable from one period to the other, you might need to sort of further delve and develop and maybe get into more granular aspects of the current indicators, but I reckon this is a good start. One aspect which I'm still not clear with is regarding the risk or the potential for better or worse positive or negative contribution. You mentioned somewhere, I believe it's in the reference to the IMPs, that you have taken basically all of the IMP 5 dimensions except for risk, which is not used in this framework since the assessment is backward looking. And I have trouble reconciling this with the fact that you also want to use it to assess future investment or greenfield projects, greenfield investments, which by definition don't have yet this kind of past track record. So hence my question, how do you effectively evaluate new projects that are not yet operational if you don't incorporate this risk dimension? How do you take at face value the declarations of the project sponsors, and on what basis? And more broadly, how do we effectively make sure that whatever data or information is shared by the project sponsors or shareholders or investor is effectively checked, made accountable or audited? I mean, this is also the dimension which I may have been missing. How do we make sure this is indeed a sincere and as much as possible sort of checked or verified dimension to avoid the kind of self-congratulatory behaviors pushing forward a positive narrative that might not be fully underpinned by the reality on the ground. So just those two more sort of technical issues. Again, I may not have got all the dimensions that you put forward, but I would appreciate some kind of clarification on this.
Yeah, thank you very much, Francois. Some really good and well-structured feedback, and during the question and answer session, we'll certainly be able to address and give you as much clarity as is available to respond to that. Although I find your point about the early stage, the greenfield projects particularly important. If I were to zoom in on my continent, Africa, as you know very well, and all of us know very well, you know, the majority, 75% plus of the real pipeline of the, you know, $100+ billion infrastructure deficit per annum for the next 10 years is essentially going to be greenfield. So we really need to be able to fix that particular issue to create a more bankable or investable situation. You know, so I think this is going to be very important to create that particular level of alignment. And with that in mind, your comment about the other initiatives in the market, what we certainly seem to want to be able to do here is, as you say, create that framework that's encompassing you know, a lot of those other initiatives. And you know, one of the exercises that we've already run already on this framework is, as you say, as Nick mentioned, you had ESG. So the asset owners were saying, well, you know, first of all, let's figure out how to deal with how to comply with ESG, and then there's the SDGs, and then that's another subject where people want to get granular on understanding compliance and applicability. And in the continent, we actually, even before the SDGs, we had our own version of the SDGs called Agenda 2063. So we know that the world is fraught with the complexities, which is why I think that this whole sort of infotech, data as infrastructure, to be able to modularize and create inclusiveness is going to be one of the key tenets for the approach that we are taking. So thank you very much for those.
Maybe, by the way, just another thought, since you touched upon the particular situation of Africa, I was wondering whether some of those benchmarks or the way we assess those contributions could be somehow adjusted or adapted to the specific regional environment. I mean, the kind of expectations or requirements you may have for a project to be considered contributing positively to the SDG in a advanced economy, or might be different from the one in a not so developed environment. Let's take the example of a road, for example, in Africa, which might be a need or even critical to promote development in a landlocked region, even though it has negative contribution in terms of CO2 or greenhouse gas emissions. Do you think this is something that could be somehow injected or taken into consideration, adapting the level of expectations or the assessment of positive and negative contribution, taking into consideration the regional development, the structure of the economy, the existing infrastructure, and the exposure of a particular country to, say, climate change or sustainability issues?
I'll leave the response to be addressed in the question and answer session, but what I will say is that this is being conceived as a global product, almost a global public good, and its utility is premised on the fact that it's going to be relevant and useful and aligned with measurements and the idiosyncrasies of local markets within those regions. So it's definitely front of mind, but colleagues will pick that up in a bit more detail in the question and answer session. So I'm now going to move to Charlotte for her review comments. Over to you, Charlotte.
Hi, I'm probably going to echo some of the other comments made by speakers around the brimming frameworks, guiding principles. I think there is definitely a need to try and bring all of this together. And I think it's great that there is a framework coming together, albeit I think my concerns come around doing anything as a bottom-up process. I think it's always good to also understand the top-down process that's happening, and that's why I've looked at this in terms of the sort of the user guide and the lens with which people will come to this. So, you know, a trustee is going to look at this in a very different way to an investment consultant, to an investment manager, and I think it would be useful to have a different version of it for different stakeholders in the impact investment chain. That certainly, it pence the purpose, and on projects that I'm working on, that's how we're looking at it, is that in order to get trustees to engage, they need to understand, have a common language with which they can then speak to their investment consultant and their managers. And as part of that, I think it needs to be simplified for trustees as well, so that they can understand how does this sit with the other things that they would be doing on impact in their portfolios. And also a little bit more upfront about the difference in terms of whether this is intentional or whether this isn't. And I know we had a little conversation earlier about intentionality, but we are getting more trustees asking about impact investing and wanting to have a positive, intentional environmental, social impact rather than just monitoring and reporting on it. So just up front, being clear about, you know, what this is trying to achieve in terms of being intentional or just actually monitoring on what's being done, I think would be great. The other thing is, if it's going to managers, it'd be useful to understand whether this is meant to be done as a one-time exercise or how often it should be used, especially given that infrastructure development has a sort of multiple time frame, given there's construction, operation phase, upgrade, decommissioning, disposal, etc. How should that be then? How should the framework then be used, given there are those multiple time frames, life cycle stages for a particular case? I think that would be helpful to understand. Those are sort of the key areas. And I think the other thing is whether there's a way of using web-based technology for this rather than spreadsheets.
Excellent. So it seems that you're threatening to pull us into the 21st century over there.
I think so, yes. I'd love to see that.
Yes.
I think my always greatest concern is I think trustees want to get on board with a lot of these things. I'm working on a project at the moment to put in place impacting principles for trustees.
Yes.
The biggest issue that they have is that consultants are the gatekeepers, and if you can get this framework to work for trustees and for consultants, I think that will go much further. And I think on the point about in the UK, we've got over 3,000 pension schemes, and the majority of them are absolutely dependent on an investment consultant or a fiduciary manager that will manage and implement everything. So I think understanding all the stakeholders in the chain is really important, and making sure it works for them is vital.
Absolutely, and being able to discharge those fiduciary responsibilities with a new and emerging and complex asset class like infrastructure certainly lends itself to that. And I think that's sort of the thinking. And again, I know that my colleagues will address it in the Q&A, but we're very alive to the fact that what we wanted to bring to the market here was this foundation that then almost becomes a hotbed for innovation. And that's where we've been really pressed on this whole infratech, data as infrastructure, modularize it, do so many different things with it, and just let people innovate. So it's almost like an open source type tool and product that can be at a regional as well as a constituency level in terms of its applicability and use. So no, really great comments. I would like to stay with you just very briefly, Charlotte, to get some feedback on your, can you hear me there, Charlotte?
Yes, I can hear you, yes.
Oh, okay, sorry, yes, I seem to be having some connectivity issues. I'd be very interested to get your views based on your own experience of creating that taxonomy or that language that you think is more effective and useful with trustees. Do you think we might be able to incorporate a bit more of that in what we're doing, based on your experience?
Yes, I'll share our impact investing principles with you, which I think will be helpful. But we've obviously done a framework which demonstrates the compatibility of fiduciary duty with impact investing. It also goes through and dismantles this idea that it's a form of ESG. We're looking at negative and positive impacts. All investors have an impact of one type or another. Are you trying to mitigate negative impacts? Are you trying to contribute to solutions and have positive impacts? And then what we're looking at is, if you've got to the point where you understand and you want to embark on that, how do you set up a policy to start off with? How do you engage with your investment consultant in order to set up a framework to be able to do that? And that means looking at the strategic asset allocation. You can't just look at this at a asset level or a manager level. It does need to come from a top-down perspective. Then how do you set up a stewardship policy to be able to do that? And how do you interact with those managers? And then how do you monitor and report on it? So it's actually looking through sequentially all the different players in the investment chain, and how you interact, how you report on each part, and then also that this is iterative. Once you've got to the stage whereby you've monitored and you've done a report, what do you do with that information?
Okay, fantastic. So just so that we understand, are you saying it's more about the how than a taxonomy around the what?
Exactly, which is why this would fit in perfectly to what we're doing as an example of the what. So
Yes.
we're providing the guide that the trustees can use, and then they need to know, well, what exists in order to be able to do that, and that's where this comes in.
Perfect. Fantastic. Really useful and really helpful, Charlotte. Thank you so much. Well, I'm going to move on to John now, for John Phillips from the Global Infrastructure Investors Association for his Brain Trust Review comments. Over to you, John.
Thanks, Hubert. It's the first time I've been involved in anything called a brains trust, and so all I can say is I'm beginning to get the feel for why it's called a brains trust, because these are actually quite complex issues, I think, to ultimately to consider, and I'm left in two minds in terms of my feedback, if to be honest and transparent about the situation, Hubert, because as others have also referenced, there is a deep concern about the proliferation and the complexity of reporting requirements on investors, and just as we get to the point where ESG is sort of regarded as mainstream in the investor dialogue, and in the investor mindset, we are potentially in danger of confusing matters by this supplementary language and supplementary framework. On the other hand, I recognise that the SDG framework is well established. It has strong currency, and we are where we are. And so I also see the value in the need for some rules and tools, if you like, about how if investors are going to start to use the language of SDGs in their communication, then we better have some rules and tools about how that's done, so that we don't have rogue reporting, and we have some ability to make mental comparison, at least, and form sort of judgments and opinions about relative achievement. So I get it, and well done to everyone that's been involved in terms of trying to, distill what is a complex picture into something that one can follow. But from my perspective, the SDG framework, the benefit of the SDG framework is the simplicity of being able to tell a story about the positive benefit of infrastructure to society. And what we must be careful about, in my view, is not seeking a level of granularity that loses that headline benefit. That there are many tools on the market to allow investors to measure detailed performance, to highlight where performance isn't good enough, and therefore the motivation to do something about it, to manage assets effectively. For me, the benefit of this framework and the simplicity of it is to be able to tell the story at a high level. So my encouragement to the group is to keep that high level picture. Yes, those stories need to be accurate and they need to be understandable and comparable, but they don't need to become a parallel reporting process. So the way I would put it, and the benefit I see from this work is the ability to translate the ESG data that is collected by investors and largely, universally now captured and used, because for a variety of stakeholder purposes, and to translate that data into a story that it can be told with accuracy to a wider stakeholder community, where the societal benefits of all of that work can be better understood. So that's how I see this tool. As I say, I don't see the attraction of a parallel reporting process,
Okay.
and that's what I think we need to guard against.
Okay.
Just in terms of a couple of specifics, having spent a bit of time, not a huge amount of time, I confess, but a little bit of time trying to understand the spreadsheet and the sort of the anticipated kind of use. I'm concerned about capturing negative impacts, not because I don't recognise the need for investors to understand, how that they should be aware of negative impacts and doing something about it. But I do worry about where you draw the line in terms of being required to identify your negative impacts against this high level framework, because I think you could make a case that almost any positive investment has a negative impact in some way or another, and I don't think that's the purpose of this framework. I think the purpose is to identify where the good things are happening, and the good things could be that there's a reduction in the bad things. But I think we have to be careful that we're not requiring people to sort of feel like we have to capture every bit of negativity. And where do you stop on that? Otherwise, I think, and then the story becomes overly complicated in the pursuit of that. I'm not even convinced that it's that helpful to capture where there's the potential for an impact. Why don't we just keep it focused on where the positive impacts are? The ESG data that underpins all of this is where asset managers and investors should be looking at how they are managing their performance and making interventions. And my final point is that I think Francois' point about trying to introduce some element of context at a country or regional sort of level, at least, I think is very important, because and it comes back to this balance between positive and negative impacts. There are different countries at different cycles of development that require different investments right now, and I think that needs to be reflected somehow, especially if we're going to try and capture negative impacts in the framework. But those are my reflections.
Thank you very much, John. It's definitely called a brain trust for the right reason. This is exactly the type of open and frank contribution that we want to get. We want to get it within an environment like this, so that we can, assure ourselves that we've been very transparent, just in terms of trying to really arrive at a product that can be useful to the specific constituency that we are trying to serve, and that constituency can hold its own within the global community of multiple constituencies, which comes to the point that this particular initiative has really come on the back of, as you say, there was ESG, and then there's SDGs, there was financing for development, and there are a number of other different agendas that are working in this space. But what we've seen a lot of is, if we as the asset owner community do not create our own sort of framework that relates to how we know we do business, we may be drawn into frameworks that do not relate to, a realistic opportunity for us to even support them, because they are just so contrary to the way that we do business and our governments and our governance frameworks and structures. So it's really about creating those rules and tools, almost from our industry's perspective, that can then almost be our ticket to the table as we look at the way that the global franchise of all of these different perspectives and ideas around this same subject, this evolving and fast-moving subject. Otherwise, we run the risk of being pulled into trying to put that square peg into the round hole. So I think that's got a lot to do with the philosophy around the leadership that I think we need to play. And again, your ideas are very well taken and appreciated. And I know that, I'm hoping that we can all spend just a little bit more time. I know that we're probably going to run over maybe 10 or so minutes, if that's okay. But then we can hopefully, in the Q&A, address these particular points. So with the time sensitivity in mind, I'm going to rush over now to Fraser, who is our last reviewer, just to give us his review comments. So over to you, Fraser.
Thanks, Hubert. I really can keep it short, because I was probably the last person on this group, and I've got to confess I only started reading the papers at 1 o'clock this afternoon. But look, I agree with a lot of the comments on there, and I think John brought up comments that really resonate with me. I think there is a lot of reporting out there, and we need to be careful that we're not just doing the same thing. I mean, it's got to be materially different, and of course tailored towards our industry. And I think with that in mind, you have chosen the right partner in this. I think GRESP is the right organisation to do this work. And just, for the sake of transparency, I've got a long working relationship with GRESP on the real estate side and now on the infrastructure side as well. So, a big thumbs up to the organisation. And look, I mean, just on my members' point of view, and all of my members are kind of listed companies. So, they're involved in transportation, energy transportation, utilities, renewables and communications infrastructure, but also the investment management community as well. I mean, there's clearly different things that they do with, under the infrastructure umbrella. And I've had two conversations this afternoon, one with a utility company, a big utility company out of the US, enterprise value about 80 billion. So obviously you'd be looking at, these SDGs from a portfolio point of view rather than an asset point of view, I guess, right? Or would they need to fill out the assets to build up to the portfolio? I mean, I guess that's a question in the Q&A. And also an energy transportation company as well. And I just did a little bit of a web search, and I think I sent round a URL to Rick, and the company that was doing these SDGs for those two companies. There's a kind of a rating system in place, and they both rated absolutely appallingly. I think they were, bottom 5% of whatever group they choose to pick. Now, I guess it's a broad kind of group of equities that this company is doing this rating system on. So I think what we're doing on the infrastructure side is going to be, highly useful. The fact that we can tailor this towards, the infrastructure asset class, because it is clearly different than, what normal companies are doing. But even under the infrastructure umbrella, there's clearly different things that our members are doing as well. And I think, John will recognise that also with his membership as well. So I guess, from my side, it should be simple, it should be clear. And Hubert May, can I just roll into sort of questions now just to get that underway? I can't hear you, but I'll take that as a yes. Okay. But look, I mean, from our side, right, the work that we do together, I mean, the first question I've got is where this is going to sit with regards to, the competition out there. There's other rating agencies doing this. So, where are we going to sit with regards to the competition? And then at the end of the day, we've got to go out and sell this, right, to our membership and to the broader investment community. So what are going to be, I think we all need to be on side with regard to our key selling points to those groups, right? And also, once this data is together, I mean, once we've, got some kind of database and some kind of scoring system, I mean, how do we plan to share this information as well? And, what can we do with that information when we go out to our membership? So I guess that sort of kicks off that I had.
Yep. Thanks very much, Fraser. If I were Rick, I'd be worried. I think you're after his job of facilitating the Q&A session. But Rick, to you, so that you can address some of Fraser's points and of course all of the review comments received. Over to you, Rick.
Sure. Thanks very much. Yeah, I'm happy to run through. I think there's a few topics that group together. So I'll try to keep it pretty short, snappy answers, but certainly happy for follow-ups in that regard because I might not give a complete answer. So in no particular order, well, chronological perhaps. Many rating agencies doing this, and that was Nick and Fraser, you had talked about that as well, and other people are doing things for sure, absolutely. We've tried to do this process and develop this with lots of industry support. You guys as the Brains Trust and talking to many and involved with others as well. And that's reflected in what we've developed, and it's also reflected in how we want to move forward as well. This is very much a by industry for industry initiative. Most of the other things out there are, one, not infra specific. Two, they are black box. So I can't get a hold of unnamed rating agency methodology on this SDGs because they don't publish it. So this being something that's by industry for industry, we make sure this is out there so everyone can see how it works. They can open the hood and see how it works. And I think that's super important to using this kind of framework. We are definitely happy to work with others on this and modify it, based on the best intel others have. So you've mentioned some parties, and if they're willing to come to the party and work with us, we're absolutely open for that in the sort of phase 2 and that type of thing. So definitely, we don't want to close the door, and we don't feel like we're competing in many ways. This is a by industry for industry initiative. When we developed this, though, we didn't find anything that was nicely applicable for infrastructure, but we remain open to sort of being proven wrong, I guess, or something that does lend itself well, in which case I think we can try to collaborate on that rather than compete. So I think that answers that question. So I'll go through these answers quickly and then maybe save up your responses until the end, because I'm just mindful of time. So if you have something as a response to that, I'll come back to you in a second. The simplification, we've definitely tried to make this simple, but I think it was a good point made around maybe having some levels, maybe some kind of executive summary or something very short that can be useful for a trustee versus a investment analyst or something like that. So that's taken on board. The size of the impacts and the forward-looking, backward-forward-looking nature, I think, is a good point made by Francois. So on the sort of backward versus forward-looking, that's something we can have a further look at. That does have a lot of sense. For those we did put down in development in the life cycle. So for those assets that are in development, there is a forward-looking impact there, which is catered for. But what we haven't done is then made a comment on the risks side of that. So that's something we'll go and have a look at before we finalise as well. It's a very good point. Regarding things like the data and how it's used and things like verification, it's a really good point as well. So we don't want this to be a tool that's used for greenwashing or sometimes called SDG washing, definitely. But we also don't want to create a whole new kind of tool out there from start to finish, from doing everything that a tool might have to do, like collect data, get the data, validate it, produce a report, and all the things that go with that, because they're already out there. And Grez, we have one of those. So we present this as a framework that can be used by many parties in different ways they may wish. We at Grez certainly plan to use this framework to take our good, reliable, industry-provided ESG data, and as to John's point, translate that into SDG terms that are very useful for telling the story. So in our process, we have verification. So by doing that, the ESG data is verified and it can validly be used to make those correct statements. So we've actually built that in already. And again, others can do that in ways that they see as necessary and as valuable. It provides a tool that can build in verification if they want it. I guess we do need to think about what if people use this tool in ways that don't have verification, and maybe we're going to have to sort of provide some guidance around that so that it doesn't get used in the wrong kind of way. The local context, definitely a good point. We definitely looked at that in the development and how we could cater for addressing local context in the conditions as we go through those different conditions that need to be satisfied. We think that could be a good sort of further development of this framework to start to bring in local context from potentially even other data sources. It might be provided by the asset itself, or it might actually be something that can be provided by an external data source without needing to increase reporting burden. So, that might come from, a World Bank report or some other database out there that says, in this location, there is a very low access to energy or electricity. So providing this generation will likely have a very big impact. Whereas perhaps in a developed country where everyone has high access, that has a much lower potential benefit. So we do see that as something for a potential further stage of development. Covered that. The intentionality and the use in impact investing, it's a really interesting area. We didn't set out to make this a framework specifically for impact investing. In fact, we kind of steered away from that because the whole huge market of infrastructure investing that is not focused on impact investing or intentionality is something that we're trying to cater for. We want this to be a big tent that everyone can get inside. However, I do think that it could be used as a tool to help impact investing just by using it up front. So if you have a desire to make a positive impact through an impact investing, this could be a good way to look forward. And that's where that forward-looking aspect comes in again. You can look forward at saying, okay, we're thinking of this kind of infrastructure. How could we make a positive contribution to the SDGs, and how would we therefore build that into our project from the start? So it could be used in that way, and maybe again we can expand on that in the guidance and the usage. So thanks for raising that. The point about how often it's used, I do think we also need to address that in the guidance as well. So that's a good point. We've kind of framed this as a annual kind of reporting, perhaps, but again, it depends on what you do already. So it really fits with all the reporting that everyone else does as a kind of an add-on, coming back to that idea of a translation tool. So however you report now, this could be an add-on you might want to use every time. You might want to use sometimes. We hadn't been too specific about that time frame. Web-based technology, great point. The way we see it at Grez, we want to be one of the first users of this framework. We already get that great ESG data from the industry. We validate that data, we score it, and we benchmark it and provide it back to participants and their investors. So that's fine. What this can do then is add on top of that, again, that translation into stories, into the standardized explanation of the benefits that isn't there right now. So that essentially means that no more data has to be provided to GRES. So based on the data that's already been provided to GRES by GRES members, you can get a potential value add on top of this additional reporting without any increased reporting burden. So essentially, we will have a web-based technology to provide reporting. At least we will volunteer to do that, and others may well want to do that as well. So I think web-based does make sense, and it's certainly something that GRES will be pursuing. On the proliferation, I think we do need to be careful, and that's why I think we really need to emphasize that this is a translation framework or tool, not a reporting tool in its own right. We don't want to add to that confusion and proliferation of recording requirements. It is by no means intended to do that, and we should make that very clear. And I think we'll probably quote you on this, John, that translate ESG data into a story that can be told with accuracy to wider stakeholders. I love that statement. So I think that really captures in essence what this is trying to do. So thanks for explaining it in that way. That's why we have a brains trust. On the negative impacts and the opportunities, it's a very interesting point, and I completely take your comment and your argument there. We've made this, coming back to a previous point, very flexible, and we haven't dictated how you use this exactly. We've got some ideas at GRES how we want to use this, but we've not said how everyone else might use this. And I think we obviously need to be careful with that because we don't want to create an opportunity for SDG washing. However, there's nothing to say that people can't pick out, some people on the call talked about 3-5 particular contributions and focus on those in their messaging. And so it's possible that it might be used without talking about the negative impacts, without talking about the opportunities, and just focus in on what is important for the audience, for the stakeholders. So there's nothing to stop that happening, but I think there is a little caution there that we just need to perhaps have some checks and balances in there that make sure that a message doesn't come out that something kind of official is endorsing something that might ultimately become SDG washing. But I think the flexibility is there to allow the statements to be identified and then used to suit the audience, whether that's just positive, whether that's positive and negative, whether that's positive, negative, and opportunities. You can imagine some audiences want to know the opportunities if it's sort of a board of an asset. They may be way more interested in the opportunities, whereas telling a story to stakeholders externally, maybe you may want to focus more on the positive impacts. I'm just about there. Yeah, I think Fraser's last 2 points were very important for us to get our head around as a brains trust and coming into the future steps. So how does this compare to other frameworks and tools out there? What differentiates this? Are super important that we're able to get our heads around that and be able to explain that. So we can support that, but I think we need the whole brains trust on board to figure that out. And then to the last point about how do we collect and share the data is a great point as well. We haven't planned that into this framework. There is no tool or process or anything to en masse collect data and share data in this framework. But from a GRES perspective, that is what we do. That's our bread and butter. We plan to continue to do that, but then potentially add this on top to provide the data then in the SDG terms. So we'll continue to collect, data by industry, for industry. This year we covered over 400 assets and over 100 funds. So we will continue to do that, and others may as well. But what we can add is then an SDG reporting component to that. So there is a mechanism there, I guess is what I'm saying. And as you know, Fraser, we're working with you on that data collection and sharing through an index in your case. So we will have that mechanism to do that. And that's where you noticed in the report that Aurelian shared, there was a little peer group comparison, and people are very interested in comparisons for good reasons. That's something that GRES can provide as a kind of an added value. Someone else just using this framework by themselves, there are no comparisons in it. It's kind of absolute. So that's where you do need a whole bunch of data. You can't make a comparison without the comparable data. So I think I've addressed all the questions as I saw them, but I'm happy to just spend a few moments if there's any follow-ups from what I've just covered.
Rick, thanks for that. So I know that there was a question from Robert Rowan from CFA New York. So perhaps we'll just take his question and then everyone else can respond to your last comments if they have something to say. Robert, over to you.
So I was very intrigued by Charlotte's comment about the nature of intent. And well, first I was wondering if she could give us an example of that, because that was it's intriguing, but I wasn't sure exactly where it lands. And I was thinking about it in terms of the context of this report. So Charlotte, would you be willing to do that?
Hi, yes, no, that's fine. So at the moment, obviously, we're working with trustees to look at the outset, them actually putting into their policy statements that they have an intention to create a positive impact towards, for instance, usually it is a sustainable development goal. And by doing that at the outset, that then filters through the consultant, putting together their strategic asset allocation through to the managers, then, and who they will decide on using. And so the intentionality could be there in terms of the trustee having the intention, or it could be that the asset itself has an intention because it is contributing to an SDG by virtue of what it's doing. And so the intentionality could come at those different points. And I think it's useful to understand the intention also, because most of those investors then want to be able to measure whether they've actually met that outcome they're trying to achieve.
Yeah, and just to, I think I sort of alluded to this, but to explain it more clearly, perhaps, I think this framework could be used to support impact investing through looking at intentionality up front, in the way that Charlotte talked about, where it might be used by investors in selecting investments and seeking out investments through their particular mandates that they might have. So they might say, we have a fund that has an intention to provide electricity where it's to people who currently don't have it. You know, that kind of energy access kind of thing might be quite important. So then they could then seek out investments that are going to provide that contribution. Now, how do they find them? Well, those investments can publish these statements on the contribution they are expecting to make. So it links up the intentionality of the investor with the intentionality of the asset. Similarly, at the asset level, assets can bring in intentionality again up front. So if you are planning a project and you say, oh, I think we want to make this an impact investment for people because it's going to attract capital that we wouldn't otherwise attract. That's interesting. That's a great idea. You can then say, what do we need to do? What kind of impact are we going to create to attract this capital? What's going to excite people and get them to want to put their money in our project? And then you can use this framework to look for that. You might say, well, we know that a lot of investors are interested in SDG 5 around gender diversity. What could we then do with our assets and make it different that will demonstrate an impact? So you put that intention in up front. You say, this project's going to be different, and what we're going to do differently is we're going to have some target on our employment in terms of gender diversity, something like that. We're going to have a policy on that from the front. So you can build those things in from the front. That is an intention. That's all that intentionality means, is intending to do something, building it up front, and then tracking it. Of course, you've got to have the measurability to prove that. There's also the additionality component. But again, if you intend to do something up front, and it wouldn't have happened otherwise because you're doing a project, it's usually pretty easy to prove the additionality. It's saying that this benefit, this contribution wouldn't have happened otherwise. Again, if you plan for that, you can address that additionality up front by the metrics that you're measuring. And I think, again, this shows in a backwards way the metrics that you would need to use, because the contribution statement, let's say it's access to electricity, defines each of the metrics that you will need to measure to be able to demonstrate that contribution has been achieved. So it allows you to sort of set that up with that intention from the start of that project or that fund.
Great. Thanks, Rick and Charlotte, for the feedback there. So Rick hopefully responded to a number of the points that you raised or clarifications that you sought, but please, now is your opportunity to come back to Rick now and Aurelian and ourselves with any, or other colleagues here with any other questions or clarifications that you might seek.
Can I just jump in because I have to just dial off in 2 seconds time. But so thank you very much. It's been a fascinating exchange. Rick's answers were very reassuring from my point of view, and I think that if you're a GRESB user and this is then an optional extra step to take by using the same data, then that works for me absolutely. And we will get behind it and encourage our members to do so when it's finalized. But thank you, very good conversation, and look forward to the next opportunity to discuss.
Super, thank you very much, John. We'll certainly be in touch soon, and look forward to your continued support and participation around the launch during the World Bank annual meetings, which we'll be providing information on the dates as we finalize them within the next few days. Rick, I don't know if there's anything else that you want to. I know that everyone's starved of time, and they've been very generous with us with their thoughts and their time, so I wouldn't want to take any more advantage of that than necessary. So I'll go around again. Does anyone ever have any burning last comments that they feel we should address now, or would you rather address them by email, or any last comments?
I've got a couple of questions, but I'll send them directly around email. I don't want to hold people up, right?
Okay, fantastic. Well, then I'll take the nods as no more immediate or direct questions. So I just really want to thank you for sharing your time and your insights. This has been extremely valuable at this critical stage. As I mentioned, we had a very tall order to turn something like this around within what might sound like a long time frame, but for something as complex as this is really a very short time frame relative to a big agenda that people have been working on for a good number of years. So we're very thankful for your input and the progress that we've made. The next steps, as we see it, we're moving towards the refinement between now and the weeks of the World Bank annual meetings, that week of the 12th, I think, to the 18th or so of October. We're just waiting on the World Bank executive that will be speaking at the event just to confirm the specific date, and we will then circulate it and hope that it will meet with your availability. So that's really our key focus now. We're going to go away. We're going to take on board your good comments and refine and improve the final product that will be launched during that week of the World Bank annual meetings. And I suppose I just want to also put out there that the comments that have come back and from other Brain Trust members have really been about this ability to and I keep using that phraseology, this infratech, this ability to use this data in many different ways, and importantly, to use this data in ways that actually helps a lot of the other initiatives that are out there that don't have some of the unique thoughts and data that we have. So we're sort of so it's really about how can we make a contribution to everything that's out there, and vice versa on this collaborative and technology-driven approach. So I'm very reassured that a number of you have reinforced that particular message. With that, I'd just like to bring the consultation to a close and thank you again, and say that we look forward to being in touch with you shortly.
Doing business in Africa. You can't afford to be without Africa Investor.